This was David Faber talking about SPACs, one of my favorite topics.
Special Purpose Acquisition Company.
Yes. So these were very popular. I think these were very popular a while ago. And it's no secret when they were popular, it was 2005, 6, and 7. Why? Because you have more idiots with more money, right? And you have easy money policies and more people making money. You see home values go up in 5, 6, 7. People feel richer. So it's easy to sell these deals, these shitty garbage deals, to the public. And when you could do that, that's why these things surged to the point where in 2020, right, we had 244 announced. 2021, 613 came to public. And then 2022, this year, it's only 76. But before this, it was pretty much less than 100. Now, when you look at statistics day, I'll set everyone up for this before I get your comments. There's still 550 in the pipeline for deals right now. And this number was over 660 because there's over 113 that were liquidated. So they come to a certain time period, they either have to pay for the extension or they remove it, they give the money back to investors. But the people who started this SPAC and put up a few $1 million, they lose that money. The few people who started the SPACs, they lose money. That's why they want to keep pushing and pushing it. There's 164 that want to come public, meaning that they made the deals, they're just waiting to come out at $10, but maybe they're looking for different pipe deals and stuff like that. So you'll get over 700 looking to rob you to individual investors, but now the individual investors are mostly broke. So, and they got wrecked in a lot of these deals. And, Kramer was just talking about with Faber how, this is fraud, this is bullshit, but, let's start there and your thoughts on this.
I think the SPAC it was just a matter of timing, in my opinion. You had another fun story to be told during a time where you had a lot of investors ripe with money because you had stimulus, you had not layoffs in the terms of taking away, but you had the shutdown, COVID, and all that kind of stuff. I think that when I first heard about it, I assumed it was new or newer. And then, you start reading about it and you're like, oh, this is nothing new under the sun. It's just the timing of it. It is a good idea to go quickly to get public and all that. For insiders, it's great. For the individual investor, it's not so good. I'm not saying they're all bad. This is just, but I'll be the boring kind of grandpa here, Frank. A lot of these were sold as just the new world problem solver. I mean, anytime that it's just the old cliche, anytime something seems too good to be true, it probably is. And you need to look at that. Here you have, again, you can replace SPACs with crypto, tulip, .com, anything. You get very good salesmen, high-end celebrities, rich folks backing stuff, you're going to see pops. And yeah, a lot of people end up getting hurt. I know you got some great stats, some stats that you're about to share. I was blown away by. I don't care that the entity exists and the process exists to do these reverse mergers and take companies public. I don't care about that. I do have a problem with the story that's told versus the story that would be read if you do all the filings. And to your point, that's the best thing I can say, because a couple of stats you told me as to what people put up and the amount of shares they get in return. I honestly thought you were misreading it or just having fun with me. But that's pretty crazy. So I'm not against that. I'm not against the entity. I don't know if you are or if you think they shouldn't be allowed. I'm just, there has to be more transparency here, but there has to also be a huge, to your point, you want the Fed to use more common sense. Individual investors have to use some common sense as well, and just know they are only selling this because it's their book. I always say, individual investors, you got to do your own homework and stuff like that and take responsibility. It's their money and stuff like that. There's things that they just don't know. And you can't know unless you're inside this industry. And that's why we're trying to change it. We're trying to change where Reg A offerings, unfortunately, Reg A offerings, 99% of them are going to be shit, for Reg A. The reason why you come out Reg A is because you can't do like a regular Reg D and you can't get institutions to fund it. So you want to go to all these individuals. And there's less regulation around it where, a lot of those deals, aren't going to work out, right? But it's the Reg A's are designed to say, okay, we want to level the playing field, but it's never level. Because you're looking at Chamath, who's canceling 2 deals, and this is why it's brought up, because the 2 deals that he's canceling that he's giving the shareholders back is one is large that he ever raised, which is 1.15 billion, and another one which is 460 million. And he raised that money mostly. You could say, well, is that from individual investors? No, he didn't raise that money from individual investors. He raised it from institutions. And why do institutions are giving him 1.15 billion? Because it's a guaranteed massive return, because they're getting in at 50 cents, $1, $1.50. These things come out at 10. And the only reason they come out at 10 is because that's when they go to you. They go to all the people and say, okay, how could we find enough stupid people to buy this?
and buy it at a valuation where they're not going to care and they're not going to look at it. Okay, well, let's go to the general public and go out there. And then, I'll promote the hell of it and go on the New York Stock Exchange and put my thumbs up like Chamath did, across the street with Virgin, with Richard Branson saying, we're going to space. The whole world's going to space, right? Well, here's what Chamath has over you, and this is the advantage. So when you see Virgin Galactic, he has 10 million shares. 10 million shares, Daniel. How much do you think he paid for 10 million shares? Say if you're buying 10 million shares. To buy 10 million shares at $1, that's a lot of money. 10 million shares.
Yeah, I bet he got them at, I remember a few figures, but let's say he got them at 50% discount.
All right, 50% discount.
Of whatever, yeah.
Yeah, so he $16,000.
16, that's a good.
16. Do you have $15,000 to invest? Think about that, guys. Do you have $15,000 to invest right now? Some of you have, right? A lot of you have $15,000 to invest, right? If you took $15,000 of your 401k, you want to invest it. Imagine if you were able to buy 10 million shares of Virgin Galactic at 001, whatever it was. So he sold 6 million of those shares for $210 million at $34 a share. Where is Virgin Galactic now? It's $5. He's totally out of the stock. Branson sold 60 million shares. He owns like 200 million shares. And these warrants, and by the way, the great thing about SPACs is you didn't have to list like the warrant structure or anything of the pipe deals. You don't know what these people are actually getting at. And plus they have quick liquidity periods where they could sell this thing within a couple of months. Okay. Opposed to what? Going into a private company, investing in a private deal, and the liquidity period before you can get out. This is why hedge funds, everybody wants liquidity. They want liquidity. When they say they want liquidity, it means we want to sell this freaking stock immediately whenever the hell we want to. That's what it means. When a hedge fund approaches you have a private company, they say, we need liquidity. How are we going to get liquidity? It means they want to get the hell out of your stock immediately and how to do it at the highest rate of return. That's what it means. It doesn't mean that, we want to be in your business long term. No, it doesn't mean that at all. So you guys should know that. But the liquidity part is funny because if you're going into a private company, the average liquidity period is 7 to 10 years. And the liquidity period is what? If you get bought out or if you IPO. With SPACs, the deal's already trading publicly. It's a holding company. So you don't have to go through all the red tape, all the bullshit with the regulation. And this thing comes public almost immediately. You raise the money and then it comes out at 10 and go a lot higher based on how much they're promoting. But that's the thing. They're promoting the hell out of this. So Branson was promoting the hell out of this. He got 200 million shares. I mean, with warrants, you don't know. You don't have to disclose any of this stuff like you do in normal, IPOs, S1 filings. So Branson got these 16 million shares. And if I had to guess, he probably paid like $400,000 for them. He sold just 16 million of those shares for $458 million. And he got to go to space for free. That's good. Thank you, investors, for funding that. So you look at Open Door, which is 6.3 million shares. He bought them for $15,000. Clover Health, 17 million shares. He bought them for $20,000.
Hold on. Sorry. Clover Health, how many shares?
17 million.
And how much money?
20,000.
Another good one.
SoFi, you guys know that one, right? 15 million shares at $18. So you could do the math of that. Where's SoFi is under $4, even at $3. Even at $3, you're looking at a $45 million, right? This is at $3. If it goes to $1, it's $15 million. If it goes to $1, he made a fortune on this. $15 million on an $18,000 investment. Yet if it goes to $1, you bought it what? 10, 9, 8? You could buy it today, it goes to $1. I mean, you look at 95% decline. These guys are making money no matter what. This is why the field is not level. These are called founder shares. This is why all of Wall Street was like, holy shit, this is really working. Remember the first couple of SPACs and everybody started going in. All of Wall Street. Then you had Ackman getting in there. You had Einhorn getting in there.
Our favorite bank, Goldman, was a big player.
Everybody, yeah, because they could make an absolute fortune. But the only way this works is if you have enough idiots to buy it at 9, 10, as long as you could sell it to that crowd. Because then if you're buying it, who's getting out? Who do you think is getting out? These guys that. So now you have Chamath come out and say, well, we canceled these two funds. And this is what he has the balls of saying. This is all legal, what he did. He's brilliant. He made a lot of money for himself, but don't go out there and pretend like he wants to run for Congress now, whatever, in California. Don't pretend like, you're not bullshitting people. That's what I hate. Don't be fake. I didn't curse. Don't be fake.
Is bullshit not a curse word?
I hate fake people. That's not a curse word. No way.
That's genius.
So 2 reasons. Yeah, that's listed as non-curse words on Wall Street Unplugged. So really quick, and again, we like to keep this 30 minutes. It's going to go a little bit longer today because I'm having fun here. He said there are 2 reasons for those cancellations for the recent 2 funds, Daniel. He goes, valuation and volatility. So the valuation goes, a combination of factors made it difficult to find a company at a reasonable valuation and margin of safety. Ultimately, to get a deal done would have required us stretching on price or buying an inferior asset. Neither were those things we felt comfortable doing. What? Are you out of your mind? And then the volatility, we saw resistance from management teams who either weren't prepared for or didn't want to face the public markets in the face of the current volatility. Okay. Neither things we feel comfortable with. Okay, so Virgin Galactic that you sold at $34, that you sold this whole pipe dream that the whole world's going to space and nobody's going to space, right? Other than the guy who, Branson, and maybe like 10 other people. So right now, even now, because he went on TV, and this is like a couple months ago, he's like, look, you got to base these things on 3 years. He goes, I'm going to be seen as an enemy, but you got to base it on 3 years, Daniels. He's like, 3 years, you'll see. I want those same people who ripped me apart to write these, reports, because that's what you're going to base. First of all, you're out of the stock. You're out of the freaking stock, right? Second of all, if you're looking right now, Virgin Galactic is $5, right? And he's talking about have required a stretching on price, right? To get a deal done, it would have required us to stretch on price or basically, valuation. Neither were things we felt comfortable doing. You felt comfortable doing it with Virgin Galactic because right now at $5, it's trading at 200 times enterprise value to sales.
Ooh.
Enterprise value is just, bringing in like the cash and that's a much more pure number, 200 times. But you felt pretty comfortable coming out with it a while ago under the same conditions, right? So just don't bullshit and lie. All right. And he's going to get sued. And you know what he's going to do? He's going to take whatever. He'll get sued under the table because they're suing him right now. And he'll pay, what is he going to pay? $20 million of the 200 million plus that he generated just off of this one deal alone. I mean, when he sold his shares. So you look at Wall Street and you wonder why everybody hates Wall Street. You wonder why crypto is gathering momentum where so much of the technology is in there. Why Bitcoin was created in the first place? Because people hate this shit. Because you have people up there lying to you, absolutely lying and being fake and making a fortune off of you. And who cares if they get sued? Oh, they kick back and they know everybody they kick it back to. The top people at the SEC are all going to be working for Goldman and everybody else. That's the way it is. Just do your research. You could see that's not a conspiracy theory. It's because they have the inside scoop and they make nothing from the government. And then Goldman's like, wow, this guy knows everyone within the SEC. So let's hire him and give him $5 million a year from, the 150 or 125 you're making. It's the top position there. So, great. That's awesome. But just think about this, guys. This is the market. This is what you're competing against when you're buying this shit. For me, I'm trying to bring a lot of these deals to you very, very early on where you can invest. And a lot of times it is accredited investors and people get pissed. But, unfortunately, a lot of Reg A deals, and I've sifted through hundreds and hundreds of deals over the past year or two, hundreds of them, and said no to almost every single one of them. Thank God, because a lot of them are getting crushed now. But there are certain deals that are coming out that look fantastic, that could be great. But this whole SPAC market is really, it really is a joke. And for Cramer, too, Cramer's been saying it here and there, throughout the years. He represents the people. Okay, he's on TV and he knows his audience. I work for him personally. I know he cares. And now he's like, really, really ripping them. And he ripped them a few times, but he's also recommended a few of these. You need to really call these guys out over the past 2 years like we were doing. Not now when everyone's crashing. Now everyone can say, these SPACs, these guys are criminals. Who cares? They made a fortune. Everybody else didn't. And nothing's going to happen to them just like the credit crisis, right? So it's all, all right, you win, Daniel. It's a fucked up system. It's a fucked up system that unfortunately is at your expense, and that's really what pisses me off. It really pisses me off. It does. It pisses me off. And there's nothing you can do about it because what's going to happen at the end of the day? Nothing. Nothing's going to change. Nothing's going to change. Well, you get a couple people that are sued that made $200, $300, $400 million. They're going to get sued for what? 10, 20 million. Government makes them money. They make their money. They'll go on to whatever they do. They have 27 houses and you're broke. And they're going to continue to do that and continue to do that. And that's why you're going to see the rise of crypto, the rise of DAO, which is governance tokens when everybody could vote. It's not just bullshit board of directors making all decisions. Just with security tokens eventually. I mean, security tokens is a hot market. I hate where the current people are taking it because they're going institution to make money because they can't make money on it right now because it's a bad market. To me, the security tokens are always a way for every investor to be able to invest in really great companies during their early stages. Now it's all institution where you have to be an accredited investor to trade some of these. That's what the current companies are doing that we've dealt with, which is very, very frustrating that we used to deal with. It's like that wasn't my vision for security tokens of what they're doing right now. And I get it. You need the money. Otherwise you go broke and no one's trading security tokens. And that's how you make money off it. But still. Yeah. But that's why you're seeing the rise in crypto. A lot of this bullshit. You're seeing decentralized finance with no third parties just constantly taking money out of your pocket no matter what. And you're seeing it right now,